All right, good afternoon, ladies and gentlemen, and thank you for joining our webinar. My name is Paul Duran, and on behalf of the team of ELCO Management, I would like to introduce Yves Siegel of Siegel Asset Management Partners, a sub-advisor for the income infrastructure and ESG infrastructure portfolios. I would like to remind everyone that this call is being recorded. If anyone is participating from the media, we ask that you please disconnect at this time. If any questions should arise, please use the Zoom Q&A tab at the bottom of the screen. I'd ask that you please view the screen for some important disclosures. I will put those up now.
All righty, let's get started. Thank you very much, Paul. Really appreciate the introduction. And good afternoon, everyone, and thank you for joining our Fireside chat. As you probably can guess, I'm Yves Siegel, and I'm very pleased in collaboration with ELCO Management to have the pleasure of hosting a conversation with Toby Rice, President and CEO, and David Khani, CFO of EQT Corp, which is the largest producer of natural gas in the United States. I formed Siegel Asset Management Partners about 2 years ago, predicated on a high conviction that traditional energy and clean energy in tandem will be required to meet climate goals. Our two strategies that Paul mentioned pursue a three-pronged approach to invest in the energy transition via traditional energy, which is primarily midstream, utilities, and clean energy stocks. We strongly believe that investor perception has not yet fully grasped that traditional energy companies have evolved to embrace financial discipline and decarbonization. EQT Corp is the epitome of this and has taken a leadership role in promoting natural gas as a key component to reducing carbon emissions. I've been super impressed with the fresh approach that Toby and his team has brought to the oil and gas industry as it relates to capital allocation and producing natural gas more efficiently, i.e., via lower cost and in a more environmentally friendly manner. In addition, Toby is leading the charge to unleash US LNG internationally as the most expeditiously and effective way to combat climate change. So with that brief introduction, welcome Toby and Dave, and thank you for taking time on this webinar.
Hey, thanks, Eve.
Yeah, and if we can just get started, let's just start with the elephant in the room. Toby, can you describe what unleash LNG means?
Yeah, so Unleash US LNG is an energy transition plan that we've put together that is going to be allow us to show how this industry is going to be the biggest solution to people's concerns over climate. Also will have a tremendous impact on providing energy security and lower prices for Americans and our allies around the world. So unleashing US LNG starts by the recognition that the most impactful thing we can do is focusing on addressing the biggest source of emissions on the planet, which is foreign coal. It actually doesn't really matter what we do here in the United States. The most important, we've lowered our emissions by over 1 billion tons over the last 15 years. But world emissions around the world have increased over 4 billion tons. So it sort of wiped us out, made us start looking, what is the biggest solution? The reason is foreign coal. Fortunately, we have a solution to eliminate coal emissions. That's replacing coal with natural gas. It's the reason why the United States has been the world leader in lowering emissions around the world. Over 60% of our emission reductions came from this one simple thing, switching coal with natural gas. So every time we put a BCF a day of natural gas on the water, it'll save about 30 million tons of emissions. That's the mechanics when you switch from coal to gas. We looked at the resource we have here in the United States and realized that this potential is absolutely amazing. We have the ability to increase our natural gas production slated for LNG exports to replace foreign coal by 50 BCF a day. That would be a 4-fold increase in LNG exports that we're doing today. And if we can do that, then they will have the environmental impact of electrifying every single vehicle in the United States, putting solar panels on every home in the US, and also doubling US wind capacity. It's 54,000 industrial scale windmills. combined. It's absolutely massive. There's nothing bigger. That's why we call it the biggest green initiative on the planet. But when you step back and you think about what type of world will we be in where, you know, we have this amount of natural gas flowing through our pipelines while slated for export, this would represent a 50% surplus of energy that is going to bring a tremendous amount of energy security to Americans, unprecedented amount of energy security, and should be lower prices and help reduce the volatility that we currently are experiencing in this world. It'll also provide tremendous energy security to our allies. 50 BCF a day in the international market would double the world LNG market today. It would replace Russia's exports by 2.5 times. So it would take Russia off the map from their ability to export natural gas. And that's going to bring an unprecedented level of energy security to our allies. The last thing about the plan that we're pretty excited about is the fact that this isn't just the biggest green initiative on the planet. It's not just the biggest energy security blanket for the world. It's also the biggest jobs creator in America. And this unleashing US LNG would create over 300,000 high paying jobs. That would be about $30 billion in wages. So whether, you know, stakeholders care about climate, they care about energy security and low prices for Americans and our allies around the world, or they care about the economy and jobs creation, you know, people should be caring about unleashing US LNG. And, you know, that's a large reason why we've received such overwhelming support for this plan. But I'm sure we can talk into some of the challenges.
You stole my next question. So what are the challenges?
Yeah. People say it's great, Toby, go ahead and do it. Well, you know, the thing that we need to do, the challenge is that we need to build pipelines and LNG facilities faster than we've ever done it before. And that's certainly the biggest problem that we face today as an industry, has been the ability to get pipelines built. There's been over 7 BCF a day, which would represent about, that would represent over 7% of natural gas production. 7 BCF a day of pipelines have been canceled, challenged, or opposed for pipeline projects in Appalachia. But the good news is, you know, the reason why people have been canceling pipelines is simply put, it's because of their concern for the climate. But now what we're showing is that, well, actually, this natural gas and getting this to the market, getting this to the water is going to be the biggest green initiative on the planet. And so if people have been blocking pipelines because of their concern for the environment, they should be supporting pipelines because of their concern for the environment. So that's the perception change that just needs to take place. And that gives us a lot more confidence that we're going to be able to get this done. The other thing I'd say is, you know, this argument that we were making was really solely is the first time this industry has made an environmentally centric argument for us to do more of what we do. But now with Ukraine and everything that's happening in Europe, energy security has also been a major factor that is causing people to rethink the energy policies that we've put in place. And, we're pretty optimistic that, you know, this perception and the needs of the world will overcome some of the past issues that people have had. I'd say, you know, the environmentalist approach and the activism approach, it was well-intentioned, but extremely misguided. And, you know, we're just showing what the biggest source of issues related to climate is. It's not the natural gas we produce, it's actually foreign coal. So it's making a pretty big impact in the way people think about energy and the policies we put in place to address climate.
So what kind of political support or political opposition have you gotten?
So from a support perspective, we spent a lot of time in DC, and the support has been overwhelmingly supportive. And keep in mind, we're not meeting with Republicans. We're meeting largely with moderate Democrats, senators, members of the House of Representatives. The feedback we got of the support, I think, is justified by a few things. I think the reason why people are reacting so favorably to this plan is that, number one, unleashing US LNG is a targeted energy transition plan. It's addressing the biggest source of emissions on the planet, which is foreign coal. It's not going to flip people's lifestyles upside down. I saw an article a few weeks ago where people were talking about feeding their kids bugs in the UK to mitigate the emissions associated with the ag industry. Saw an article, people in South Korea are now recycling toilet water to make their beer. So, I mean, these are the type of extreme energy solutions that people are providing. Unleashing US LNG will not cause anybody to disrupt their lives. It's very targeted. It's very impactful, which is another reason why people support. As I mentioned, the biggest thing we can do as it relates to the environment, energy security, and job creation. But I'd say the other couple things that are really important is the fact that this plan is feasible. For us to be able to unleash US LNG, all we have to do is add 50 rigs to get this production that we need. And is that feasible? Well, when you think about, we used to run over 2,000 rigs in this country as a proxy for the supply chains that we've built up, the rigs, the crews, the roughnecks, the frac crews. We've got all that. Adding 50 rigs is not going to be an issue. So it's very feasible for us to be able to do this. And I'd say the last thing that is probably the most important thing of all is that Unleash US LNG is the only sustainable energy transition plan. And when I talk about sustainability, I'm not just talking about the environment. I'm talking about the most important thing when it comes to sustainability, and that's profitability. This plan is profitable. We can put natural gas on the doorstep of Europe for a cost of $9, and that would imply a $4 gas price here in the United States. And in that price structure, customers, consumers in Europe and America would be thrilled. In Europe, to get their natural gas at $10 compared to the $60 that or north of $50 it's at today. It would be absolutely tremendous. And $10 for natural gas translates to an oil price equivalent of about $60 per barrel. You can build pretty amazing economies with $60 barrel energy costs. And for the United States consumer, $4 would be a bargain compared to the 20-year average gas price of $4.50, well below where gas prices are now. So the consumers would really like this, and with that price structure, industry would really like this. With a $4 domestic price and $10 international price, this industry will be able to make moderate profits or moderate returns, and that means this is profitable. That means that this industry can finance this ourselves. And that means it would take the government $0. It would cost the American taxpayer $0. And what that means is that any of the environmental impacts and benefits that we generate here would be additive to any plans that the government is planning on putting out. So because it's targeted, because it's impactful, the feasibility of it, and also the sustainability of this effort is the reason why we've gotten such great support to date.
So no subsidies.
No subsidies, but we'll take them. But no subsidies needed to make this happen.
So just on the political front, do we need legislation? How do you get the permits done, and what are the next steps? How do you actually seeing this become reality?
Yeah, I mean, it's crazy to think the energy crisis that we're dealing with right now. In the solution to make that happen, it's literally we need somebody behind a desk with a stamp to go like this, read a piece of paper and approve it. If that happens, then we'll be able to unleash this and create sustainable growth opportunities. So I mean, the challenge with regulations is a lot of people think about it's really bureaucratic, but the good news is, we're not talking about changing physics. We're talking about things that we can actually control with strong political leadership. And the fact that there's an energy crisis right now, the unnecessarily high energy prices, the rampant inflation, the war in Ukraine, all of this can be relieved if this administration would embrace unleashing US LNG and streamlining the permitting process so we can get to work. The reality, Yves, is for us to actually build an LNG facility, take out the red tape and all the bureaucracy, and we can build these type of facilities in less than 24 months. Obviously, it takes a lot longer to build those facilities, but this is the proposition that we're going to be able to go to our leadership and say, this project that we'd like to do and these pipelines are going to take, under the current setup, would take about 6 years for us to be able to get this done. But in reality, it will only take us 2 years. We could build this in 2 years with your support. What can we do to work together to get the construction of this closer to 2 years than 6? And I think the timing pressure is going to really be elevated because every winter that we enter without having energy security, that lack of energy security is a bullet in the gun, and the world is playing Russian roulette. So, I mean, time matters here. And I think you're seeing the civil unrest around the world. in addition to Putin's influence. And I think there's a clear appetite to look at ways that we can accelerate the mitigation of this crisis that we're in, the negative repercussions.
Well, two things, two questions. One is, EQT has been out front saying that you want to have net zero GHG emissions by 2025. And there's a perception that, natural gas, fossil fuels are dirty. So how do you get to net zero by 2025? And, what is the company doing in that regard?
Yeah, that's a great question. I think every investor, when you see a company put out a net zero plan, the question needs to be, well, what's that zero carbon tag going to cost you? For us, and how are you going to get there? So for us at EQT, we look at our net zero price tag to be around $4 million. And I'll tell you how we get there. So what we're doing, our carbon footprint was around 1.1 million tons of CO2. The biggest initiative that we're doing is replacing our pneumatic devices. That's going to essentially eliminate all methane emissions from our operations. That program is basically just replacing equipment with no methane emission devices. We're pulling out over almost 10,000 of these devices across our portfolio of assets, and that's going to cost us around $25 million. That is going to have an impact of lowering our carbon footprint from 1.1 million tons to 400,000 tons. So when you think about the cost per ton to abate those emissions, it's incredibly impactful, and it's extremely affordable to be able to do that. It actually breaks out to be less than $5 a ton. So that $25 million puts us at around 400,000 tons of CO2 equivalent per year. That's the emissions that we need that are associated with running our rigs, running our frac crews, having our well tenders drive trucks. I mean, that's our base business. We're going to take that to net zero by developing carbon offsets, land-based carbon offsets. We have over 1.6 million acres of agreements of leasehold with our landowners, and looking at ways that we can generate land-based carbon offsets is how we're going to generate the credits needed to offset that 400,000 tons. I think we have the ability, haven't done it yet, but we do think that we have the ability to generate these offsets for less than $10 a ton. So when you look at the 400,000 tons per year at $10 a ton, there's our $4 million per year price tag. And for a company with our scale, $4 million is extremely affordable, and it's a reason why we're looking to accelerate our ability to get there. Because ultimately, the biggest environmental concern that people have in our industry right now is the emissions associated with our production. For us to be able to say we're net zero and is putting our money where our mouth is and taking that concern off of the table, in addition to offsetting these emissions and eliminating the biggest sources of methane. The other thing we're doing is bringing radical transparency into the program. So our responsibly certified gas is the product that we're talking about here. And that transparency is going to be, absolutely needed so that people know when we say we're net zero, it's bulletproof. And then we can focus on, not about the emissions associated with what it takes for us to make our product. We can focus the conversation on how does our product, natural gas, reduce emissions around the world by replacing foreign coal? As I mentioned, that's where the conversation needs to be, because every time we put a BCF a day of gas on the water, it saves 30 million tons of emissions. When you think about EQT and our 6 BCF a day of gross gas, this company has the opportunity to have an impact on this world of reducing emissions by over 180 million tons of CO2. That's absolutely impactful. That's so massive. But let's make sure we get our house in order and make that bulletproof so that we can get the people focused on the things that really matter. And that is, if you care about emissions, that's replacing foreign.
So how do you respond to the perception that natural gas is just a bridge fuel? And why am I going to invest in? Dave is laughing. Why am I going to invest in a liquefaction facility if in 15 years natural gas is going to be obsolete?
Well, the good news is, these contracts that we're going to be signing to underwrite any of these investments, for us to capture this opportunity, it's going to start with long-term contracts. So that's going to, at a minimum, justify the investments that we make today and generate some pretty decent returns. Past that, people calling it bridge fuel, some people take offense to that. You know, I'm fine with it. It's got to be a very long bridge. Let's make that very clear. But, you know, what's really interesting to understand is that natural gas is going to be the zero carbon fuel of the future, because we know that we can transform natural gas into a zero carbon product, whether that's blue hydrogen or blue ammonia or any other products that are out there. We can make natural gas a zero carbon solution. The question is, at what price, and will the customer sign up to do it? What's really amazing about Unleash US LNG, when you think about the hydrogen economy, which is what everybody is really focused on as a long-term solution, Unleash US LNG is the reason, provides this country an opportunity to rebuild over 50 BCF a day of pipeline infrastructure. When we build that infrastructure, let's build it with the future in mind. Let's make this infrastructure hydrogen ready. And if we can use Unleash US LNG to essentially underwrite the hydrogen infrastructure of the future, then we've just taken a giant step forward towards this country realizing their zero carbon economy goals. Because the cost right now for blue hydrogen, we know we can make this stuff for a cost of $20 per million BTU. So $20 per MCF. You know, the majority of the cost to actually make natural gas carbon free is not very expensive. The majority of the costs, over 2/3 of that cost though, are related to building the infrastructure. So if we have a plan on Unleash US LNG that will justify building the infrastructure, then now we've just significantly lowered the hurdle to make the hydrogen economy happen. And that's going to be that hydrogen it's going to be able to move blue hydrogen, green hydrogen, pink hydrogen, brown hydrogen, all hydrogen. So this is a really great opportunity about how this industry could be a major leader towards moving towards that zero carbon energy source of the future. And at the end of the day, you know, worst case scenario, Yves, you know, natural gas is a final product that people consume today. In the future, natural gas may be a feedstock for hydrogen production. The bottom line is people are always going to need to use hydrogen. It's the most, natural gas, and it's the most impactful, the cheapest way that we can actually generate, you know, hydrogen, which I do believe is what a lot of people are thinking is going to be the long-term game plan for to provide reliability to low carbon grids.
You know, I want to bring Dave into the conversation. Dave, what's your macro outlook for natural gas? Prices have gone from $9.30 to $5.50. What's the short-term outlook? What's the long-term outlook? Uh-oh, we lost Dave.
Dave, you're muted. You're muted on WebEx.
Can you hear me?
Yeah, there we go.
All right, good. So, it's a really good question. I can say one, you know, we've seen gas double and more than double in volatility. So we know we're going to be living with a very volatile world, and we've seen the curve move out and be volatile over time. So we know that we're watching a structural shift that's been happening, and that's, you know, I would say supply has not, you know, been responding anywhere near what it has in the past, and that's in part because producers are being a little bit more disciplined, not chasing short-term trends, and trying to chase, we'll call it, more long-term demand signals. So that's an important thing, and investors want to get paid back for all the capital they put into the E&P companies over the last, you know, several years. So I think that's playing into it. You know, the amount of capital that has come out of the space is put a lot of pressure on ability to actually grow. It's going to take some time to rebuild. So for us to add those 50 rigs that Toby's talking about, it's not going to happen overnight, right? It's going to take a few years to get there. It's not going to be a long time, but it's just not going to be instantaneous. On top of that, you have coal that's had a dramatic reduction in investment. You know, we produce about 7 billion tons of coal in this world. 6 of it is for thermal coal for power. It has about a 10% depletion rate, so that's about 700 million a year of depleting supply. Capital's not flowing, and so that's going to be downward pressure. That's going to keep upward pressure on gas. So I think short term, it's hard to know, but I would say, the days of $2 to $3 gas range is probably over. And now the range is probably realistically probably 4 by 7 with spikes above it and periods where you could go below for moments in time. But we're in a world where gas is now in a much more challenged world to do it without seeing the supply response that Toby talked about to unleash LNG. So short term, who knows for sure? We know it's going to be volatile. Longer term, we could say $4 world is probably a comfortable world that we see going forward.
So when you think about EQT, what kind of gas price do you need to generate a good return, and what is the governor in terms of increasing production?
Yeah, that's a great question. For us, real simple to understand where EQT starts generating free cash flow. Our Henry Hub break-even price is around $2.30. Every penny, and that's what it takes for us to run our overhead, run our maintenance program, to keep our production flat, accounts for basis, all these things. It's $2.30. Every penny above that break-even price that we receive translates to $20 million of free cash flow. So for every dollar above 230 translates to about $2 billion. It's a very simple way to think about our business. So we can generate some pretty healthy returns with a $4 gas price. It's a pretty compelling investment opportunity. As far as growth is concerned, while we have the capacity to grow, we are going to continue to be disciplined to make sure that the only growth that we will consider is sustainable growth. And sustainable growth means that we are growing in sync with demand. And that's why Unleash US LNG is so important to unlock sustainable growth for not only EQT but this industry. It's making sure that we have these long-term contracts signed up. We have the LNG facilities built, the pipelines built, and then the operator can respond with production. What's really amazing to think about is the productivity of the upstream sector in this country. We have the capacity to grow over 10 BCF a day a year. We did it from 2017 to 2018. But I think the discipline is going to make sure that we have that demand there, so that we're not throwing the supply-demand fundamentals out of whack. So that's going to be a really key thing. But I think one thing that's really interesting to note is that I think EQT is favorably positioned in that race to supply the world with LNG, because we have a few different criteria that I really think elevate us and put us at the top of the list as far as gas buyers are concerned. Number one, bulletproof balance sheet. Being investment grade matters when we're structuring these long-term agreements. Number two, we have a very deep inventory of future drilling prospects. We have over 1.6 million acres of shale here, and that's some of the best shale in the world. We've got about 900,000 adders we've marked as core, and that right there provides an 18-year inventory, and then we've got another 700,000 acres behind that is economic at a price north at $4. We can generate really, really attractive returns there. So we've got a world-class inventory that's going to allow us to supply these long-term contracts for decades. That's a very differentiating feature that EQT has. And I'd say the last thing that's really important is that the environmental performance of our gas. We have some of the best, if not the best, emissions intensity score for our natural gas that we produce. So when you're looking to buy clean gas, there's none better than EQT. And I think that ultimately the buyers will differentiate between the emissions intensity of your gas, and EQT will be at the top of the list. And that will all be certified with our gas certification. So, for those three reasons, I think EQT will be favorably positioned to compete in this new market that really is being established now.
Can you also describe the nature of those long-term contracts? Who's taking the other side of those contracts?
Yeah, so we'll be dealing hopefully directly with the end buyers of gas. So it'll be utilities and industrials overseas. So it's going to be the end market. And
those folks will be responsible for transporting the gas from the U.S. to wherever it has to go.
Yeah, I think that would be our goal, is to let them deal with the transportation, but we will also be prepared if we need to set up logistics.
And then how do you think about capital allocation if you're going to be generating so much free cash flow?
Yeah, so for us, it's all about what's going to maximize, the most value creation here. So when we look at free cash flow per share growth, it's a couple things we're looking to do. We've made commitments to get our debt levels down to a long-term leverage target of 1x. In the short term, we're going to be putting over $1.5 billion to retiring a portion of that debt that will get us there. We've also said that we're going to be doing we've authorized $1 billion share buyback. And then we've also instituted a more robust dividend, which is about 50 cents a share. So that's sort of the baseline in the short term, but yeah, there's a lot more free cash flow over and above the next 2 years. I think our last company presentation, our 5-year free cash flow was I think $18 billion, Khani. Yeah, so I mean it's significant more than the $2.5 billion I just outlined right there. So I think there's opportunities for us to continue to accelerate our debt pay down, but we have ample capacity to continue to do more robust share buybacks, and this pullback in the equity price has certainly made that opportunity even more compelling today.
I led off by saying the oil and gas industry, has changed, that it's gotten, capital discipline, that it's embracing, ESG. Is that reality, or is that just optics? And how do you think about it?
No, 100% this industry is embracing ESG. I think you want to signal that. Look at the discipline that operators have had. I mean, ESG, I think a lot of people just focus on the environmental aspects of it, and you can see a tremendous amount of focus on that. Methane emissions, when I was talking to Secretary Granholm, she's asking about methane emissions. I said, listen, if you're concerned about methane emissions, keep the bullseye on that, because this industry is going to knock this out of the park. For natural gas players, look at the number of players that are doing responsibly certified gas. And it's not just the publics. When you start seeing the private operators doing this as well, that this industry is fully embracing these environmental concerns. But stepping back, ESG is really about long-term profitability. And I think the discipline that you're seeing right now is a symbol of that new mentality that we have that is going to drive long-term profitability. What's really changed in a nutshell is we have evolved from chasing short-term price signals to responding to long-term demand signals. And that's really important. That should hopefully relieve some of the volatility that we've dealt with in the past. But I think it's absolutely critical for us to embrace ESG in the future. But one thing that's clear, we've got to understand and get back to what is the root, what is the goal of ESG? It's profitability for the long term. It's not only about the environment. And I think when the world gets out of balance with the E, the S, and the G, unintended consequences happen. Exactly what's going on in Europe right now. When you focus on E and you don't think about the S, which is the secure energy security, bad things can happen. But we're going to take a balanced approach, and the solutions that we're providing for the world with Unleashing US LNG is going to accomplish all of the ESG tenets and set this company up to generate significant profits for the future.
Are you concerned? Well, I guess it's really two questions. Are you concerned about recession, inflation, the topics that are hitting, the stock market? And are there anything else that maybe keeps you up at night?
Go ahead, Khani, take the lead.
Yeah, so we are worried about recession. We are tracking and seeing a slowdown, clear slowdown in Europe. We're seeing a slowdown in the US. We obviously saw the Chinese go in lockdown mode, and they're starting to come out and start to consume a little bit, and seeing some numbers positively there. But yeah, we are worried about it, and that's why we hedge at times, because we need to be prepared for not just the good times but the bad times. And so, we set up our hedge program to make sure that we are giving investors the best, we'll call it risk-adjusted upside, and that means that we use collars and puts to be able to handle the drop in the commodity price at moments in time. But then, as I said, gas is very volatile. So, gas here at 5 or 6 and, 50 or 60 abroad, they connect at times and they connect to coal. And so you don't know when the bottom drops out and you don't know when the top's going to pop off. And so, but we're in a very crazy world so being able to prepare for the worst of times and the best of times, that's the commodity market that we've all lived in, and it's only going to be more and more volatile with what's going on. So yeah, we are prepared for the volatility and the downside that's coming at us, and we do feel it and see it in the numbers, and that's why we saw gas in part sell down. We also saw Freeport go off, right? That was a nice surprise for all of us. And gas, dropped $4 off the front end, and it dropped $1.50 off of next year's price, and now we turn around and see it's up 70 cents this morning or this afternoon. So again, it's a very volatile world, and you got to be able to handle the volatility. And I think for us, having a really good balance sheet and having the right hedge program is going to enable us to separate from the crowd over time.
Great. Toby, do you have any concerns
Yeah, listen, I think we're going to be in a world where it's going to be a little volatile, but I think we need to have firm vision of what the future looks like. And, there's a tremendous opportunity for natural gas. One thing I don't think is going to change is people's concerns over climate. And that means coal, the biggest governor on natural gas prices, is going to continue to be withered away. Right now, coal prices are implying about $10 per million BTU, so $10 gas price. So coal to gas switching or gas to coal switching, I think is going to continue to weaken, and that just means stronger natural gas prices in the future. But it's going to be a little bit choppy. But for what this industry can do, what EQT can play in this, I think is absolutely tremendous, and that's I think, for long-term investors to think about that. The opportunity for natural gas is massive. Just to replace all the foreign coal, Yves, is pretty important to understand. Our plan is big and it's bold, and we can take out 50 BCF a day of foreign coal, but foreign coal is a monster. There's over 175 BCF a day of coal to gas switching opportunity around the world. Forget about just the natural growth in gas demand over time, which is set for, I think S&P has it rising 40 BCF a day, about 10% globally around the world. So we're in a really exciting time where natural gas is breaking out from being a regionally constrained domestic commodity into being put on a world stage. And while there is chop, and you will see us, protect against some of the volatility, we're very optimistic about the future.
Well, I want to be mindful of the time, and I really don't want this next comment to come across as trying to flatter you folks, but I led off the conversation by just saying, just super impressed with what EQT has done, and I truly believe it epitomizes what the oil and gas industry is evolving to, and hopefully you can make everything a reality. So thank you so much, both of you, for spending time with us. And I look forward to unleashing LNG.
There we go.
All right.
Thanks, Yves.
All right, thanks, guys. Appreciate it. All right.
All right. Thanks, everybody.
All right. Thank you, everyone. And this has been recorded, and we will make the recording available to folks that would like to have it. And again, thanks, guys. Have a good one. Bye-bye.
There we go. Bye.